everybody, welcome back. I guess this is my second video on NinZaRenko and how I'm using it with my trading strategies. By no means did I expect the response that I got on the first video. I actually intended that to be shared with a group of friends that I trade with on an almost daily basis, good people, and thanks to everyone who jumped in and watched it. Your comments have been great, and you've encouraged me to jump in and give you a second look at the NinZaRenko setup that I'm using. So if you want to know what indicators I'm using and how to set them up, go ahead and watch that original video. But now I'm going to dive a little deeper into how I actually use these indicators to help me in selecting a good entry, and I'll talk a little bit about targets, but I'm going to have to do a future video on that one because I'm using something kind of new and unique to me and specific. I learned from a group of guys in one of my Discord channels, how to kind of correlate some levels from options chains. I'm not the first to do it and probably not the last, but I will share with you how I'm getting that data and able to use it to sort of manage entries and exit positions and sort of track market flow. So anyways, right now I've been trading micros. I'm trying to scale up the number of contracts that I'm using so that I can scale in and out of positions, and on the minis that's challenging. So micros gives me 1/10 of the exposure, so I'm able to come in with 10 contracts instead of one contract, and that helps me sort of scale in and out, and I'll show you a little bit about what I'm doing with that as well. But first off, let's talk a little bit about the NinZaRenko bar, what it is, how it functions. I know I got a few questions on that, but I'll zoom in a little bit on a chart here. I'll start by doing a quick drawing. So we have a region here, so we'll go, here's the top of a NinZaRenko bar, there's the bottom of a NinZaRenko bar. If you look over here, we're at 2133.1 and 2131.1, so that's 2 points of move, but each point has 10 ticks, so that's the equivalent of 20 ticks of move. So if you look up here on the left hand corner, I've got NinZaRenko set up as one of my quick select for time, and 20/5 is the one that I'm currently on. So the 20 is an indication of how many ticks are in a candle, and then the 5 is how many ticks before the next candle prints. So if we roll up, because we're in an uptrend, and we look at this, we've got 2132.6 all the way up to 2133.1. So you do the math, that's 5 ticks. So half a point, basically. So every half a point, the next NinZaRenko bar is going to print. Next good question would be on a reversal. How does that look? So if we go down here, measure a reversal candle. So there's the top of the previous candle, and we are 2124.1 to 2125.6. So that would be 14 ticks of reversal, and this candle actually has to print all the way down the full 20 ticks before it actually prints. So it could wick down 19 ticks, turn around and go back up. In fact, that's, if you look right here, you'll see it almost made it to printing a new bar, but it wicked down, managed to go far enough to print the next bar, which also made it down far enough. But then the following bar only made it 3 or 4 ticks, not sure how many, and then reversed and went back in the other direction. So that's what the wicks are for. You'll see if you go to a shorter time frame, you'll actually see some bars print, and that's what we'll talk about next here, is kind of the time frame and how you pick the right time frame based on the market you're looking at. So we'll kind of zoom back to look at the market on kind of a bigger scale. So as you can see down here, this is this morning, or midnight, I guess, New York time, and this is all the action that happened today. So if you had been looking at, and this is Russell on the micro, and you saw a crossover happen here, this would have been a potential entry signal if you had entered, and depending on your strategy, this is a really huge run. I mean, you go from where it crosses down here, you might have got in at 21, let's say 2107, something like that, and it runs all the way up to 2141 or 2142 at the end of the day. Like, that's an incredible move on the Russell. So things were a little bit sideways earlier, but the problem with this is 20 ticks on the Russell can get expensive, especially if you're trading minis. Now, micros, it's not so bad, but this might put you in a little bit of jeopardy where, for example, here you had a quick run up. By the time you would have gotten into this trade, it's already going to start reversing against you. And now, in order to not get stopped out, you've got to place your stop, at the previous low, which is over here, or potentially over here, depending on what your strategy is, and you would stop out for a loss because these are quite large bars. So I'll go down a couple of stages. Let this reload. Now we can see the same chart, but the area where there was only 8 or 10 bars now has close to twice as many, because we're at 20, not at 20 ticks anymore. We're now at 12 ticks per bar. So 8 less ticks per bar. So now we're almost at 1 point per bar on the uptrend, and the bars print new every 3 ticks. So these are variables that you can certainly change. So let's just show you how to do that. Right click on the chart, click on data series. We have the NinZaRenco up. We've got 12.3. Let's say I wanted it to be 12.5 so that it only changes after moving 5 ticks. So I'll hit apply. Okay. Now, if I zoom in a little bit, you can see that there's 5 ticks between printing the new bar as opposed to 3 ticks. Now, I like having a level of consistency, so that's why I like to just double each number. So 4.1, 8.2, 12.3, 16.4. So all I'm doing is adding 4 to the first number and moving up, and then adding 1 to the second number and moving up. And that way my scales are the same. It's just the size of the bars are increasing. So we'll go back into 12.3. And as you can see, there's some decent moves on the change in market. You would probably stop out on some of these pullbacks, but might be able to get back in, or you might take profits and keep some contracts in, or you might scale some out and then scale some back in when it starts running back up. There's many ways to trade this, but so that's the NinZaRenco bars. Now let's talk a little bit about the indicators I have in the background. So essentially these are just moving averages, and a lot of people have traded off of moving averages for a long time, and they tend to work. But what you need to really think about is, what does each moving average represent? And so the red line on my chart is of 200, and you could set that to whatever you want it to be. The guy who kind of introduced me to this, he used 888. as his moving average. Now, I use some other charts to help me with my indications, and 888 didn't really match up with any of that. So I chose not to use that. But if you want to get into a long-term trend, 888 is probably an outstanding thing to use. Or you could set it to 500 or whatever you want. But basically, all it's doing is taking the last however many, so in my case 200 bars, and averaging the position of those 200 bars, and that's what this moving average is. So I'll switch it to 888, and you guys will see a fairly significant change where that kind of levels out, right? Because it's averaging way more bars and giving you kind of a flatter line. Now, when it does start to change direction, it maybe becomes more important in the big direction change. I'm not a big swing trader. I typically only day trade. So for me, it was a little bit long, but you can set this to essentially whatever you want. But I'll show you what I'm doing, and then you guys play with it and see what you think. My trigger period is 9. Again, that's correlated with another indicator that I'm using. I'll show you it real quick, but basically this is day traders. This is fast money moving in and out of the market, and it changes direction quickly, right? It's a lagging indicator. It's following the direction of the candles, but this is basically your fast, quick money in and out. The 200 is more of your really slow, long money, like it's institutional money that is on the long play. It's kind of like a big ship in the water. If you wanted to turn it, you have one or two rudders. It takes a long time for that big ship to turn. Sorry for all the folks in Baltimore, but that's kind of an example of that ship was just too much mass to turn, and lost power and whatever. But that's kind of the example. So 9 and 200, and then I use 9 and 30. The 9s just lay on top of each other, and 30 is kind of your intraday money. That's gives you a strong idea of the direction and when reversals are coming. But those three moving averages are the levels, are the areas where I'm looking for, a reversal or change in market structure. So the black area indicates that the 9 has dropped below the 200. And so anytime that 9 is below the 200, you're going to get this black colored area. The white colored area is the opposite. Anytime the 9 crosses above the 200, you get a white area. And so that just quickly tells you that, we're in long territory. We should be careful if we're shorting this market, because the indications are that it's going long. If it's black, that means the indications are that the long-term money is taking us short. So we want to be careful to take longs in those areas. And then if we just zoom in on a couple areas here to show you. So here's an example where, the 9 breaks. If you jumped on this immediately to take a long play because you're looking for a breakout trade, you'd be looking left. You had a level here where it previously tested. It kind of tested here again. Then it breaks and you're thinking, oh, this is going long. You're going to jump in and run that up. You want to be careful, and I prefer something like this over here, where it breaks that level, comes back and tests it, maybe tests it a couple times, then it starts going short. Now that's getting me more excited as far as jumping into an intraday trade. If you take it on the initial break, it can be dangerous. Now let's look at the correlation between the 9 and the 30 and the 200. So as you see, the 9 crosses the 30 way more frequently. So what that is your scalping trades. So here's an example. If you get the 9 crossing the 30 right here, this is a long, but you're in a short market. So you could jump in here, ride it up. As soon as it starts to turn and come back down, you could wait till it crosses the 30 again, or crosses the 30 and the 200 right here. Like, that's a pretty strong indication that we're going short, and you might be able to scalp a few points out of that. Personally, I would wait for this retest, and I'll show you some levels in a minute that I am actually using to sort of indicate when I want to get in and out of trades. But basically, it's just moving averages. And when the 9 crosses the 30 on the downside, things go red. When it crosses the 30 to the upside, things go green. So that's my moving averages, along with the NinZaRenko. And so, the next thing is to kind of figure out, well, what NinZaRenko makes sense for what market. So I'll look at a few different markets. So this is M2K, so it's Russell's micro. 12.3 is what I trade most often on it. But if you go 4.1, this is very quick moving. So if you want to scalp, so you're jumping in and out and trying to make trades, this would be 4.1 would be good. But if you look at the timeline down here, some of this happens pretty quick. So we're at 3:47 right here. So this is 10 minutes of time from 3:47 way over here to 3:57 way over here. So that, it moves from 21:30 up to 21:36.6. So that's 6.5 points of movement. So that's a pretty decent amount of movement. But with all this back and forth, it might scare you a little bit. And you see it reversing like this, and that might scare you out. So let's look at that same thing. So 3:47. So we'll go back over to the 12.3, and let's scoot over here to 42.54. So right in here somewhere is about where, so 15.46. So see how you don't have any of those retraces? We're on a larger bar, so essentially it's a longer time frame. It's really not time-based. It's based on how far the market moves. But if you compare that time frame, because this is the same time frame, becomes much easier to stay in this trade. So let's just say you see the reversal, you decide to get in here, and you're in the trade, and you're just going to follow it up, and maybe you want to trail it 2 bars behind. So as it keeps moving up, you just trail your stop up behind it, and you wouldn't have gotten stopped out until almost at the end of the move. So that's 12.3. You could go a lot longer. Let's go 24.6. So again, here we had a move at 10:15 this morning where the 9 crosses below the 200, goes back up, comes back down, doesn't break it, and continues long. That, to me, is an indication that I want to enter long, because it tried to break the 200 down, wasn't able to, comes back, retests it, wasn't able to. Now let's jump in long. So if you jump in long on this, the issue here is your bars are 24 ticks. So that's almost 2.5 points on what could be a very expensive contract. So if you like to get in trades and stay in trades for a longer period of time, I would definitely recommend longer bar frames. If you're more of a intraday, not a scalper, but not looking to hold long-term trades, then you might want to do something like 12.6 or maybe even 8.2. And then also you have to look at the market. Like, what is this market doing? How many contracts are coming in and out? And that's what I'll look at next. So if we switch over to NQ, and it is on 12.3 right now, but I'll zoom out as kind of far as I can. And this is zoomed out as far as I can zoom out on NinjaTrader. And 11 o'clock this morning is as far back as I can zoom. If I switch back over to 12.3, same time frame on the Russell, and zoom out as far as I can. So this is the same number of bars on the screen. I'm all the way back to last week, Thursday. So there's a lot less volume happening on this market than there is on NQ, which, you know, anyone who knows trading knows that already. But if you're trading, let's say 4-1 on the NQ, this will take a minute to load. Okay. It's a lot of data, so it does take a minute to load. I wouldn't recommend trading 4-1 on this ever. But let's just say you wanted to. Look at how far these bars are moving and how quickly they're moving there. So if you're a true pure scalper, this could work. You know, you see the 9 crosses the 30 up here. The 30 starts heading down. They're both about to cross the 200. If you're quick on the draw, you might be able to get in right where this cross happens. And then you've got a decent move down. But it's going to come back against you multiple times because 4 ticks on NASDAQ is nothing. Like, that's only 1 point. NASDAQ can move 20 points in seconds. So, you know, if you're in a fast-moving NASDAQ market, and right now it's slow, like we're after hours, so it's ticking along, but it's moving slow. This is really, really fast. So what I find is 12.3 is about as fast as I want to go on the NASDAQ. And if you see, you know, this is, what, 320, you know, 325, 27, somewhere in there. Like, there's a move that you got the 9, tries to break, comes back, doesn't break, pulls back, goes back up, breaks on the second one. Like, that's an entry. And when the 30 crosses it, that's really an entry. So you get in here somewhere. Let's just look at it for a second. Let's say you get in a long position right here, and you're really smart and manage to hold it through all of this mess up to here. You know, you're going 8.79 risk to reward. And that actually, your risk to reward would be a little better because you'd want your stop kind of at that previous low right there. So now we're at a 10.72. I mean, that's a huge move. We're going up to 18.5, 22.93 from 18. That's 100 points. I mean, anyone who could ride that all the way up would be a better person than me, because I tend to chicken out once I see a little bit of money on the table. So, which is something I'm working on, but not there yet. So 12.3, NASDAQ's kind of the big boy, right? It can chew you up, but you could do a longer time frame on NASDAQ, which makes it sometimes a little easier to get in and stay in. But here's, you know, that same move. It looks a little bit differently here. So you break, test, then go long. This would be really easy to stay in, although see how big those wicks are? You'd have to trail probably 4 candles behind so that you don't get stopped out, which means you're leaving money on the table when it finally does reverse on you. But you would get stopped out here, maybe get back in, stopped out, get back. No, this is getting messy. Once the 30 goes flat, that's an indication to me to sit on my hands and stop trading. So back to 12.3, just because I want you guys to know what I'm actually trading on. So Russell's 8.2, sometimes 12.3. If it's moving really slow, I might go to a 4.1, but and then ES or MES in this case, I almost exclusively trade it on 8.2. And so, you know, this kind of a pattern becomes awfully easy to follow up. You do get, you know, obviously some false signals, but that's why you don't take the initial signal. Like here we tested, didn't really break, came back up, tested again, broke. This could possibly have gotten me, but because we had this previous move looking like it's going long, and I'm going to turn levels on here in a second and show you. This probably would not have got me in a short. I would have waited for this push up to try and take it long. And so turn the levels on now. Maybe. Oh, you know what? I probably don't have them on that chart. Hang on. Yeah, sorry. All right. So I don't have them set up on that chart for. Okay. So here's MES, June contracts. Here my levels are on. So 520, what does that mean? So that is the the option price that correlates with the futures price. And 521, 522, 523. So what happens is people playing the options market, they care about moving price away from or towards one of these price targets. And if we zoom out, you'll see that, and nothing's perfect, but these levels are kind of like magnets, right? So early yesterday, price runs up, it breaks this level, comes back, tests that level, goes up, tests the next level, breaks, come back down and test, isn't able to continue any longer, breaks down, breaks this level, tests it multiple times. So that's why, you've got to be careful, and having these levels helps me. And this is that trade late in the day. And I'm kicking myself a little bit because I was setting up to get ready to do this video and I missed this one. But this is a trade, at 3:20 in the afternoon where, it had been consolidating. It broke out, pulled back, tested, came back, broke down, took off, and it's all happening at this 520 level. And I'll zoom out so you can see all the levels. So these red levels, these are all calls. And at 2 o'clock this afternoon, these were not the most heavily weighted calls. The heavily weighted calls were 520, 519, and 518. As the market started to move towards the end of the day, all of a sudden a bunch of new call volume came in, people buying out of the money calls, and that means they're going to try and drive the market up. And, frankly, we don't have deep enough pockets to move the market, so we just have to follow along. So when I see those red calls coming in, that tells me the market's going to run up. And sure enough, it ran up, and it put all of these three levels of calls in the money. And, they all closed out before the end of the day and took their profits and walked away. At the same time, these puts are showing up here. And that's probably, it's either long-term money that's been in for a long time, or it could be market makers that are trying to hedge their positions, or could have been, from early this morning or early in the week or whatever. But basically, these are probably hedge positions. This one may not be the 526, but and there's puts and calls on the white lines too. They're just not as many as there would be on the more dark colored lines. So I'll just show you this to you. So this is basically my spreadsheet of charts. And so this dynamically changes throughout the day. But you can see the volume. So this is new stuff that just came in today. So there was a lot more calls than puts came in today, which, correlates with the fact that the market kind of ran up, right? These people all want to push the market higher, which puts their positions into profit. And throughout the day, so early on, there was a massive number of puts here. And so that's the other piece of the puzzle is at like 445, 446, 447, all of these people were getting out of their positions to take profit. And so when they start to sell, that's going to also tend to drive the price up. And then all of these calls, a lot of them were here this morning, but some of them were added throughout the day. So basically you can kind of tell, like on SPY, which correlates to ES, you pretty much just had a wall of calls here most of the day. There were a few puts that disappeared, but you know, when the market was running down in our trading group, we were all talking about, you know, when's it going to stop and turn? And sure enough, the end of the day, it stopped and turned, and I missed that move because I was not paying attention. But this just helps give you an idea. And so these charts are the levels that I have, you know, plotted on my actual charts. And so there's a ton of videos out there on how to set up delta weighted charts and those kinds of things. And I'm going to probably do a more detailed video on how I set it up and share formulas and stuff with you guys. And if someone wants to take the time to set it up, they certainly can. My son happens to be a high school kid and he's a coder. And so we're actually going to we're about halfway done actually coding an indicator that people would be able to use so they wouldn't have to build the charts themselves. So probably I'll do the video on the spreadsheet first, and then once I get him done on coding the actual indicator, we'll figure out how we're going to make that available to people who don't want to learn Excel or don't want to code. So anyways, these are levels. They're very important. I'll bring down NQ as well. Turn chart trader off and zoom. And then I'll turn the levels on here. And if we zoom out a little bit, kind of stretch it. So you just see like testing, like breaks level but doesn't get to the next level, comes back, goes back up. Like in this, I see this, I'm basically not trading. I'm waiting for the breakout to happen. And in NQ, it's a little, you know, scary sometimes, but basically my bias was long because of the calls that were in the market. So I might have tried a few times to catch the bottom of one of these and try and take it long, but probably would have gotten stopped out for a break even or maybe even a small loss. And truthfully, I might not have caught this one, but on the pullback and the run up, I probably would have caught it up here in the middle of this channel somewhere. And I would have probably taken this one and probably gotten stopped out for a small profit. But again, I wasn't trading this afternoon, so wasn't able to make that happen. But at any rate, that, you know, this was a massive move. You know, 419, let's just say 420 up to 520. That's 100 points. My gosh. Wish I'd have been in it. That would have been awesome. But so these levels, you know, every market has them. It's a correlation between the whichever index I choose. I try to pick the biggest index out there so that I'm looking at calls and puts, and it's amazing how much these levels actually come into effect. And this is a perfect example. You've got puts above, calls below, and at market close, where was it? Right in the middle. So that's what market makers love. They want to be balanced on their books. And so if they finish right in the middle, that means these puts made a little bit of money. The one real close might not have made enough money to even justify them, and the calls made a little bit of money. But basically, it's a balanced market for the bookmakers. Whereas down here, and these calls were here, this was not balanced. So, you know, this happens to push because a lot of the puts that were up above started selling, and the buyer stepped in, bottom, took them long, and that's how we ended with a 100-point move at the end of the day. So pretty cool stuff. I think I've covered pretty much everything. If anyone wants it, I'll put it in my description, but the DT Planned Levels Visualizer is the levels indicator. It's not really an indicator. You have to provide it a text file to give it the levels, and you can manually do it. And some people, like my chart, actually updates every 10 minutes, so it's fresh data throughout the day, which is useful because these calls and puts change throughout the day. But if you just started in the morning and know that 445 is a level that has a bunch of calls at it, and 444 and 443, it at least gives you something to play off of. And then when you're using the cross, so the 9 and the 30 both cross the 200, you break this level, come back and test that level, and then take off. Like, this is a really solid buy signal right here, because you had a breakout, you had a retest, and you're going to get into profit quick enough that you could move your stop into a can't lose. And then if you're patient enough, you could just watch it run. I'm not that patient. I tend to squeeze trades and get stopped out, but for profit. But that's just my style. I don't like to leave money on the table. I'm never good in Vegas because I don't ever let it ride. So you'll never hear about me making my millions in Vegas. So anyways, it's probably a longer video than it needed to be, but I wanted to kind of run through and share a bunch of stuff with you guys. That's all I got for today. Probably a week or so, and hopefully I'll have the indicator coded that I can share with folks, and I'll do a video on how to actually set up the Excel spreadsheet if someone wants to take advantage of having live levels instead of just setting them first thing in the morning and away you go. So let me just jump in and show you guys real quick. Indicators, so DT planned levels. So basically there's a text file that you have to this indicator looks at, and in that text file it's going to give these levels and where they correlate on whatever instrument you're looking at. So I have QQQ levels here. I would have SPY levels on my ES chart, IWM on my Russell chart. That just whatever index you want to use, and you can use whatever index you believe in. And then default colors don't really matter because I actually code the color into my text file. And then, default opacity. I do make my text a little bit larger because of my old eyes. But if you want to, have smaller text or larger text, you can align them in the middle, to the left, to the right. I like them to the right because that's where I'm looking most of the time. And then calculate on bar close. I hoped that this would auto update, but for whatever reason it doesn't. Because I'd like it to refresh this text file, but the only way to refresh that text file, I'll show you in a second, is to turn it on and off. And then the visuals you don't really need to do anything with. All that stuff comes set up the way it is. So we'll cancel that. But this PLV, so it's your planned levels. If you turn them off, they go away. Turn them back on, they come back on. And if the highest or most important levels of calls and puts have changed colors, your lines will change colors as well. But every level has some amount of calls or puts at it. So anyways, that's NinZaRenko. I hope it helps answer questions from people who are wanting to get more info than what my first video had. And if anyone has questions, just put them in the comments. Usually within a day or two, I'm getting to them, and I'll do my best to answer. But that's it for today. Thanks for watching, and good luck. Happy trading, and keep the emotions down. And it's find the big money and ride the wave. That's my best advice to anyone is, don't try and move the market. The market's going to move itself, and you just got to jump on and ride the wave. So good luck, everybody. Bye for now.